Welcome to the ultimate investment showdown. In the world of investing, you've got three major players constantly battling for a spot in your portfolio: ETFs, mutual funds, and of course, individual stocks. Today, we're going to break them all down to figure out which one is the champion for you.
Look, if you've ever felt totally lost trying to pick the right investments, you are definitely not alone. The best way to think about it is like building a sports team. You need players with different skills, right? So the big question we're asking today is, who are you going to draft for your team?
First things first, let's get the official scouting report on our three main contenders. Each one brings a totally unique style to the game, and they all come with their own set of strengths and, yeah, some weaknesses too.
So first up, we have the individual stock. This is your star player, the high-flying specialist. When you buy a stock, you're literally buying a tiny piece of one single company. Now, this can lead to massive returns if that company just takes off, but it's a high-stakes game. If your star player has a bad day, your whole portfolio feels it, big time.
Next in the lineup, the mutual fund. Think of this one as the seasoned veteran of the team. It's a whole portfolio of different stocks and bonds, and it's all managed by a professional. But here's the catch. This player is on a very strict schedule. It only trades once per day after the market closes at a single set price. That price is called the net asset value, or NAV. It's basically the fund's official price for that day.
And that brings us to our final contender, the ETF, or exchange-traded fund. This is the modern do-it-all player. Just like a mutual fund, it's a whole basket of different investments. But, and this is a big but, it trades all day long on an exchange just like a stock. So it kind of combines the teamwork of the mutual fund with the speed and agility of that star player.
All right, let's get to our first head-to-head matchup. In this corner, the modern all-rounder, the ETF. And in the other, the seasoned pro, the mutual fund. They're both built on diversification, but believe me, their game plans could not be more different.
So the two biggest battlegrounds between ETFs and mutual funds really come down to two things: trading flexibility, that's how and when you can buy and sell, and cost structure, what you actually pay to own them. And these differences can have a huge impact on your money over the long haul.
So this chart really lays it all out. You can see right away ETFs trade all day long, which gives you a ton of flexibility. Mutual funds? Nope, just once after the market closes. And then look at the costs. ETFs usually have lower annual fees. We call those expense ratios. And a lot of them have zero minimum investment. That makes them way more accessible, especially if you're just starting out.
Okay, on to round two. Now we're pitting the team approach of an ETF against the solo power of an individual stock. And this isn't just about different players anymore. This is about two completely different strategies for winning the game.
The absolute superpower of an ETF is what we call instant diversification. With just a single share, you're not just betting on one company to succeed.
You're getting exposure to dozens, sometimes hundreds of companies all at once. And what that means in the real world is that it drastically reduces your risk. Think about it. If one company in that fund takes a nosedive, the rest of the team is right there to help soften the blow.
Now, on the other side of the field, individual stocks give you something an ETF just can't: direct ownership. You are a part owner of that specific company. You've got a direct line to its success or its failure.
But that direct ownership comes with some major trade-offs. Sure, the potential for huge returns is there if you pick a winner, but all your risk is focused on that one pick. And so is the responsibility. It is 100% on you to do the research and build out your own diversified team, stock by stock, which, let me tell you, takes a whole lot more work.
So, we've seen the scouting reports, we've watched the matchups, now it's time for the coach's decision. And guess what? That coach is you. Which of these champions belongs on your team depends entirely on your personal game plan.
So when should an ETF be your top draft pick? Well, you should seriously consider it if you're a beginner who wants that easy built-in diversification. It's also perfect if you're keeping a close eye on costs, or if you just want the flexibility to trade whenever you want during the day.
So what about the seasoned pro, the mutual fund? Who's that for? This is really for the investor who wants a set-it-and-forget-it kind of approach, who trusts a professional manager to make all the calls. If you're okay with only trading once a day, and you've got the cash to meet any minimum investment requirements, this could be a really solid choice for your team.
And finally, the star player. Who should be drafting individual stocks? Honestly, this is for the more experienced investors out there, the folks who actually enjoy doing deep dive research into specific companies. You have to be willing to accept much higher risk for that chance at much higher returns. This is really the path for people who want to be totally hands-on with every single draft pick.
All right, so we've laid out the players, the strategies, and the game plans. Each one has a role to play, but not every player belongs on every team. The choice really boils down to your goals, your comfort with risk, and your personal style. So the only question left is this. With your first pick in the draft, who are you taking?